What I need for forward contract are two things. So I'll not take more than a minute to do this. I'll not take more than a minute to do this because for forward contracts, I need two things. I need the exchange rate. And then number two, I need the amount really. So I need the exchange rate and the amount. So we have the amount, how much have they given us here really? The amount is 5 million. The amount is 5 million pesos. 5 million pesos. Amount is 5 million pesos. Is it a payable or a receivable? 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 You can see here, ZPS company must pay interest on the date set by the bank. A payment of 5 million pesos is due in 6 months' time. So it's a 6 months payment. So it's a payment. So whenever it's a payment, what will be the role of the bank? The role of the bank, will the bank buy or sell? Right, now we say sell, right. I'm waiting to hear from the others and please talk to me. Talk to me. I want to get away from this topic and we really must be very good in it. We must be very good. So remember, it's only girls who are talking to me. I don't know why it's only girls who are talking to me tonight. Is it because of this concept of foreign boyfriend? A foreign boyfriend buys dinner. A foreign boyfriend buys dinner. A foreign boyfriend buys dinner. These are very important rule. Foreign receipt. Borrow foreign. I'm not going to use really this because these are rule of money markets, but there is something that I'm interested in here. Receipt. When the company is receiving foreign money, the bank always buys. So whenever it is a receivable, the bank buys. And whenever it's a payment or a payable, then the bank now does opposite. So the bank does what here? The bank sells. The bank sells there. So first of all, up to there, are we together? We must give Mwalimu feedback. Please, if this is your first class, remember this is foreign boyfriend. Foreign boyfriend, yes. Thank you very much. So in this case here, the bank will buy. So I hope you've written there that here, the bank will buy in capital letters. The bank will buy the pesos. The bank will buy the pesos like that. Great. So tick there. Second thing, it's 6 months. So 6 months exchange rate. 6 months exchange rate, they'll always give you 2 rates, there are even more rates, but we have to really be cognizant of the period when you are required to make this payment. It is 6 months. So if they give us, for example, an exchange rate of 9 months, that is useless. If they give us an exchange rate of today, what we call spot rate, again, that is useless. We want 6 months. So 6 months payment, it's a 6 months payment, 6 months payment. So the 6 months payment is here. 6 month forward rate. So we have 12 points. So 6 months forward rate, exchange rate, 6 months forward exchange rate. We have 12.805 to 12.889 pesos per dollar, per US dollar, per US dollar, per US dollar, per US dollar. Now, could you kindly be very, very good to Mwalimu tonight, as you've always been? Can you kindly tell me this company called ZPS, which country, where is it based? Where is this country based, or which currency is its home currency? Right? Ah, I can see these are payments. Sorry, I made a mistake here. This is a payment, so the bank sells. Thank you very much, Jimmy. The bank sells, yes. It's a payment. Sorry for that. The bank will sell. It's a payment. It's a payment. It's a payment. It's a payable. Please, in this case, you can even highlight this. The bank sells. Thank you very much. Thank you very much. Now tell me which currency. They have told us up there that this, ladies and gentlemen, this ZPS uses the dollar. ZPS, whose home currency is the dollar. So once they've told us that the home currency is the dollar, then I need to shake my hand towards my home currency. So my home currency is the dollar. Look at this. The home currency is the dollar, and the dollar is on this side, right side. The dollar is on the right side. And if the dollar is on the right side, then this becomes the buy, and this becomes what here, somebody? The sell. Remember, the buying, especially the buying, is normally or rather is normally based on where your home currency is found. If your home currency is the second currency per dollar on this side, right side, then the right figure becomes the buy. So they've told me that the bank will sell. The bank will sell. We said up there, the bank will sell. So the bank is going to sell at what rate? At 12.805 pesos per dollar. Because you just told me that the bank is going to sell. So then if that is the case, could you kindly go ahead and do the last thing, which is exchange? Please go ahead and do the last thing, which is exchange, and then you give me an answer. The last thing, which is exchange, and then you give me an answer. Do the last thing, which is exchanging, and then you give me an answer. Right? Fidelis is saying that the board is not clear. From my side, I'm seeing it very clearly. I don't know. Are you able to see this board clearly, or it has an issue? Not clear. Quite blurred. Okay. Okay. Let me try to see what I can do here. Okay. Okay. No wonder you guys are not getting the answers, isn't it? No wonder you guys weren't getting answers. How about now? Is there any improvement? Is there any improvement? Is there any improvement? Is there any improvement? Any improvement? Any improvement? No. What do you mean? What? Then there must be a problem. Not yet. Then tonight there must be a problem, and this is a camera which I don't know how to use. You'll bear with me. You'll bear with me. Tungangane. Tungangane, you'll bear with me. Tungangane. Hata leo sitaki kuongea sana. We shall overcome. We shall overcome. Oh, it was better before. Now, unfortunately, I can't return there. I don't have the expertise of doing that. And the person who does that, who is Mr. Frank, is not around today. He's not around today. So please go ahead and exchange. So when you're exchanging, it is 12.805 pesos equals $1 US. How about 5 million pesos? How about 5 million pesos? How about 5 million pesos? So please go ahead and cross multiply. So it will be 5 million pesos times $1 times $1 all over 12.805 pesos. So the pesos will cancel out, leaving me an answer which is in form of what here, dollar. So 5 million divided by this gives me what figure? 5 million. 5 million divided by 12.805 will give me how much? 5 million divided by 12.805 will give me how much? 390 $390.42. $390.42. Is it 390? 390.4, yes, 390,472. 472. 390,472. Great. $390,472 is the correct answer. I'm so sure all of us would have gotten this figure. In an exam, I'm so sure all of us would have gotten that figure. Sini ukweli. Kwa exam ungepata nyote. Sini ukweli. See the board, okay. Great. Now, I don't even want you guys to see the board today. So today nataka muangalie hizi vitu. So nataka tuangalie hapa. Yes, nataka tuangalie same question, but this time around using what year if the company hedges the peso payment using a money market hedge. Very, very confusing question, this one. Right? Very confusing question, this one. ZPS company, whose home currency is a dollar, took out a fixed interest rate, which is what year? Peso loan. Several years ago, when peso interest rates were relatively cheap compared to dollar interest rates. ZPS company does not have any income in pesos. Economic difficulties have now increased peso interest rates, while dollar interest rates have remained relatively stable. ZPS company must pay interest on the date set by the bank. A payment of 5 million pesos is due in 6 months' time. The following information is available. So they've given us the spot rate, they've given us the 6 months forward rate. Interest rates which can be used by ZPS company, they are given there. They're given there, right? So they're asking us a very simple question. What are the appropriate 6 months interest rates for ZPS company to use if the company hedges the peso payment? And the answers are given there. Not answers, but of course, options. You're going to pick only one. You're going to pick only one. So I want you to take 1 minute to reason over this question and try to give me the answers to use. So remember here, there are 4 interest rates. They only want you to give them 2. Which one is the borrowing rate? Which one is the depositing rate? Only 2. Only 2 rates. Only 2 rates. Just try as I work out on this camera, which Jamie apparently hates. It's a very big camera. It's a 500,000 camera. It's only that I don't know how to use it. Great, I can see in this case here good arguments, but Lily, how could you honestly start answering this without even drawing our table? Lily, this is a money market question. Where do you want to get a 0 here? Where do you want to get a 0, Lily, here? Or let me see. It's a money market question. I have to draw the table. And I hope you are taking screenshots of these questions. Please take screenshots of these questions. They are so nice questions, very good questions. These ones, when I look at them like this, I feel something in me. Very nice, but you guys are not treating them with the seriousness they deserve, really. Either you never woke up those days early in the morning to attend to this topic, or you don't have moods for the topic, this topic today. Great, I can see one chat here. No, I'm not even going to write anything. I'm not writing anything. I'm only expecting you guys now to give me answers. I'm not writing anything. I'm not writing anything. I'm not writing anything now. It's you guys who are on the ball. It's you guys who are on the ball. Yeah, according to this great lady called Karen, she's saying that D is the correct answer. Thank you so much. Let's see. D, 3.5 and 10%. Let's see. Let's see. Let's see. Great. Great. Any other student who is going to put in some effort and try and tell us exactly what they think could be the correct answer to this question? A, B, C, D. A, B, C, D, A, B, C, D, A, B, C, D, A, B, C, D. Yeah, I'm not going to write anything because my students can't see nothing. They can't see nothing. They can't see nothing. D, D. D. A, okay. Now, number one, remember this is a payment question. So if it's a payment question, could you kindly tell me in money markets, which rule am I going to use? That's the first thing. Which rule am I going to use? Because money market question, you must know the rule to be used. You must know the rule to be used. And there are two rules. In money markets, we have a thank you very much. Thank you very much. So they're telling me it is rule number 2. Rule number 2, which is a foreign payment, foreign payment, foreign payment, foreign payment, borrow local. And we know that the local currency for this company is which currency? Is the dollar. The local currency, okay, thank you. The local currency is the dollar. You told me that the local currency for this company is the dollar. So they're going to borrow the local, or is low. That's why maybe yes. Now this guy is telling me what yes could be very truthful. It's the network which could be low, which is affecting students. Sorry, I'll make improvement on that. So foreign payment, you borrow local. We've got two currencies here. We have the dollar. We have the dollar vis-a-vis what your peso. And the local currency is the dollar. Great. So then come and draw the table. Now we can move now with speed. Draw the table like this. Right? The first leg, of course, is the borrowing. You borrow. This one here is depositing. So, and you've told me to borrow the dollar here, and now deposit will be the other one, which is the what here? The peso. The peso. Right? But ladies and gentlemen, they don't even want me to do any calculations. In this question, they don't want me to do any calculations. They only want rates. So here then I would want the borrowing rate of the dollar. The borrowing rate of the dollar. The borrowing rate of the dollar. So now here I would want the borrowing rate of the dollar. Are you able to see the borrowing rate of the dollar? Borrowing rate of the dollar, borrowing rate of the dollar. It's 4.5%. 4.5%. So dollar borrowing rate. So borrowing rate of the dollar. Dollar borrowing rate is 4.5%. How about peso? Now peso on the other side we are depositing. So pesos depositing rate, pesos depositing rate, pesos depositing rate happens to be what here? Pesos depositing, if you look at this, pesos depositing rate is 7.5% deposit. Great. 7.5%. Thank you very much. 7.5%. But you see, this is a crazy examiner. You know, these figures are annualized. They are for a whole year. They are for a whole year. What he came and asked you to ensure that you get a zero, what he asked you here was very simple. What he asked you to do here, what are the appropriate 6 months? So you need to come and take this one here times 6/12, times 6/12. Nipatieni answers jameni, zitakuja ngapi? Nipatieni answers jameni, zitakuja ngapi? Nipatieni answers jameni, zitakuja ngapi? Oye. Oye. So the dollar borrowing rate ya 6 months. Ya 6 months inakuja ngapi? Dollar borrowing rate ya 6 months inakuja ngapi? 2.25, right? So 2.25 versus what year? Versus no dex umeshaongeza ile 1, which is wrong. But what I got just the rates alone. Hata dex hakuna answers kama hizo pale. Aha, hii inakuja 3.75%. Those are the answers which you are required to give to be able to get those marks there. Ndio na wanafunzi wanaanguka ACC sana because ACC ni multiple choice. Multiple choice unanyoroshangwa. Hata CFA. Multiple choice ni mbaya. Ni mbaya sana multiple choice. Multiple choice ni mbaya sana. Naona hii. Hata ukija kwa answer yao hapa, utaona that's what they have. Like that. Aya. So tuende kwa the next one. Hapana. Umekosea. Nilikuwa nataka, ladies and gentlemen, to solve hii swali yote tukitumia money markets. Hii swali tuisolve yote sasa 100% tukitumia money markets. Hii swali sasa tuisolve 100% using money markets. That as a question. Let's try solving this question 100% using money markets. 100% using money markets. Iko mwenye anaweza kweli. 100% using money markets. Now that my board is clear, I can come and do something better here. So we are told like that. So we have here borrow. We have here deposit. Right? We are borrowing the dollar. We are depositing the other currency, which is the pesos, like that. And as somebody called Lily told us some time back here, if it's money markets, we always convert at spot. Now, you guys have given me the borrowing rate of the dollar. The borrowing rate of the dollar that you gave to me, is here. Dollar borrowing is 4.5% per year. So we have here 4.5% times 6/12 plus 1 for the dollar. Could you kindly give me this answer? Right? I hope you remember this part here. 4.5% times 6/12 plus 1. Marietta Mutunga, give me this double M. Gives me 1.0225. Terry is giving me the other one. Terry is giving me the other one. Okay. So for the depositing of the pesos, depositing of the pesos, depositing of the pesos, depositing of the pesos, what do we have here? Depositing of the pesos, it is 7.5% per year. So this is 7.5% per year times 6 over 12 plus 1. I believe this is what Madam Marietta, Washanipatia already, 1.0375. Thank you very much. 1.0375. Now, there is, ladies and gentlemen, an area here that I would want us to take a few blows. I would want to give you a few technical knockouts. No, it can't be many technical knockouts. Technical knockout kwa moja. So hapa kwa spot rate, ndio hii spot rate. Kumbuka money market, you always make use of the spot rate. The spot rate. In money market, you always make use of the spot rate. Now, ladies and gentlemen, katika hii spot rate, sisi nikatumia zote mbili. Nieke gani pale sasa? Nieke gani hapa katika? Nieke 12.50 ama 12.582 pesos per dollar. Ni gani nitaweka hapo katikati jameni? Kwa hizo mbili, ni gani nitaweka katikati hapo jameni? Ni gani nitaweka katikati hapo jameni? Haki sipati answers za kutosha. Sijui kama bado board na wachanganya. Sipati answers za kutosha jameni. Great. Now they're coming in. Now they're coming in. Remember, it is 12. It is 12. It is 12.5 to 12.582 pesos per dollar. Pesos per dollar. And you're the ones who have told me that, Mwalimu, you know what? This country, or rather this company, uses the dollar as the local currency, as the home currency. And the home currency is here on the right. So the right side, so the right value here becomes automatically buy. This becomes buy, and the other one becomes who? Sell. So buy versus who? Sell, like that. Buy versus who? Sell. And you're the ones who told me that, Mwalimu, for this question, given that is a payment question, use foreign payment, borrow local rule. You can write this in full. Foreign payment, borrow local. I know a foreign boyfriend is the one who buys dinner, right? So this one here must be what here? Sells. Sells. So, and because it's a selling question, then we shall be able to pick what you guys told me. So convert a spot, which is 12.50 pesos per dollar. Thank you so much. I thought I would give you a technical knockout. You have survived. You have survived. You guys are geniuses. You have survived. Now, here is where the rubber meets the road. The money in the question, chini ya meza. Lagi chini ya meza pande gani? Should I put the 5 million here? Should I put the 5 million in A or B? Where should I put the 5 million? Where should I put the 5 million? Yes, B. Because the 5 million, these are 5 million pesos. These are 5 million pesos. They are 5 million pesos. They can't be put on the leg of the dollars. We must come and put them here. 5 million pesos. 5 million pesos. Now, what do we do now? From there, we start our process up. Up, what do we do? Up, divide. Up, we always divide and write our answers in whole numbers. Divide. Thank you very much. Up, divide. So could you kindly give me this 5 million divided by this? Give me an answer to write there. So from DEX, it's 4819,277. 4819,277. The only thing that DEX forgot to tell us is that these are pesos. 4819,277. They're pesos. Don't leave the figure that you have in your calculator that has got decimals. We don't want it. Delete it. Delete it. And then now here, of course, you exchange. Could you kindly exchange me and tell me the dollars to write here? Could you exchange and tell me the dollars to write there? Exchange. When you're exchanging, I would recommend you go the mother tongue way. Go the mother tongue way. We know that 12.5 pesos equals $1. This is the exchange rate given. right? So how about 48,19,277 pesos? How about this? How about this? How about this? Marietta, you must have multiplied. You must have multiplied, which is wrong. When you try here, it will be dividing, isn't it? It will be dividing, which Fatima tells me will be 385, $542. So here we have 385, $542, like that. 385, $542. Thank you very much. Now down, lastly, down, what do we do downwards? Downwards, what do we do? Downwards, so it's a free flow down. What do we do? What do we do there? We multiply. Could you kindly do that and assist me? Kindly do that and assist me. Thank you so much. Thank you so much. And now that there we are. Great. Great. Thank you so much. Thank you so much. Thank you so much. Thank you so much. Great. Now, if this examiner wants to confuse you, if I were an examiner this time around, and I would want to confuse you so seriously, this is what I'll come and give you guys. I'll tell you that Mr. Guga is a serious investor who has done some business in the US. And now Guga, who is one of us, I'm using him because he's one of us here. So Guga here expects to receive dollars 6 million in how many months' time? In 3 months' time. All right. So you'll be given the spot exchange rate. I forgot to tell you that here Mr. Guga is a Kenyan, who would need really Kenyan shillings. He's a Kenyan. So you'll be given the spot exchange rate. The spot exchange rate is 117 to 119 Kenyan shillings per watt year per dollar. And then, ladies and gentlemen, they'll come and they give us here the premium. Premium, 3 months premium. 3 months premium in cents. 3 months premium in cents. They'll give you 3 to 4, like that. 3 months premium in cents, 3 to 4. Then they'll come and give you just a simple thing. They'll tell you interest rate, Kenya equals 14%. Interest rate, US equals 8%. All right. And then you'll be required here to do something very simple. You'll be required here to determine the amount receivable by Mr. Guga, amount Mr. Guga will receive if he hedges, number one, using forward contract. Then number two, money markets here. We have Mr. Guga, who is a Kenyan here, who is expecting to receive some foreign currency in 3 months' time. They have given us the spot exchange rate, 117 to 119 Kenya shillings per dollar. Then they have given us 3 months premium in cents. Anytime they give us cents, always remember that cents, you have to divide them by what year? 100. Hata kama sielewi chochote, cents, I must always divide cents with 100% to change to whichever currency, percent. You must always divide by 100. Then they've given us the interest rate in Kenya. We have interest rate in the US. So here, I expect you guys to give me an answer here. Please give me an answer there. Please give me an answer there. Please give me an answer there. Yeah, now I can see the board is much clearer. I want to believe Jamie must have prayed for me. Great. So please don't tell me to do the question. Let's try it ourselves first. Let's try it ourselves first. Anybody working on something? Is there anybody who is working on something? Yep. So I can see Dex giving me 702 million. The only thing, Dex, you forgot is to give me the currency. Always mention the currency. This is foreign. It's foreign. Nevertheless, I'm so happy to see a student who moves very fast. Even if you would be wrong, it doesn't matter so long as you've tried. That is the most important thing. We are trying. We are trying. We are trying. So when you're given a premium, for you to get the forward rate, will you subtract or will you add? When you're given the premium, how do you go to the forward rate? Do you add or subtract? Thank you so much. You less, you subtract. Then you guys are champions. I don't know why you are keeping silent with your answers. Please don't keep silent with your answers because you know so many things. Always remember like this. If it's a discount, always we talk of what here, this famous thing, are these. Are these. Discount, you add a discount. And therefore, always, therefore, subtract premium. And therefore, subtract premium. Please write this somewhere there. Sijui kunaweza kuwa na yellow highlighter, mlikataa yellow mtaki. I don't know, mimi sitaki siasa lakini iko msichana niliona ameweka highlighters zingine mzuri kama ni violet ama ni color gani. This is very important for me. This is very important for me. Hata kama ni color gani, please highlight. And then write this in full. Unajua hii mahesabu ya money markets, kuna vitu ukijua, you can never go wrong. Kama sasa hii hapa, add discounts, subtract what your premiums. Halafu kuja ujue kitu ya interest rate parity. Ukuja ujue kitu ya inflation rate parity. You can never go, akijaribu kutwist this way, unamwambia anajua. Unaona? Hiyo unamwambia unajua. So kama hii ni kitu ya maana sana. Ume-highlight, I want to know kama ume-highlight. Have you written this someone who can highlight? Great. Because now we shall never repeat this again. Hiyo imeisha namna hiyo sasa. So premium, we are subtracting. So then come and give us here, we have our spot, which is 117 to 119 Kenya shillings per dollar. And then now we have our premium, which is 0.03 to 0.04. So we are subtracting now to be able to get the forward. To be able to get the forward, could you kindly give me this forward 117 minus this? So, and I hope you guys are seeing where I'm getting 0.03 from. Because they are cents, we must divide them with 100. So Marietta has given me a figure here, 116.97 to, how about this? To what here, somebody? To 118.96. Kumbukeni Guga ni Mkenya, Mr. Guga ni Mkenya, Kenya shilling currency iko pande hii. So then this becomes buy, and this becomes what here? Sell. And because he is hedging in the forward contract, forward market hedge, because it's a forward market hedge, then you're going to use this as the exchange rate forward. We're going to use this as the exchange rate forward. Thank you so much. Now, from ladies and gentlemen, what I'll come and do here, very first, I know what to do. I know what to do here. Now, when it comes to forward contract, I need two things. I need number one, the amount. The amount in this case here is $6 million, which happens to be a receivable or a receipt. And therefore, we know that if it's a receipt, foreign boyfriend buys. So, and therefore, the bank will buy. At what rate? At 6.97 Kenya shillings per dollar. 118.96. Okay, great. Now, of course, after this, I know what will ensue here. After this, I know at the end of the day now here is to come and do what here? Do the exchange. So I'll go ahead and do the exchange. So go ahead and do the exchange. So go ahead and do the exchange here. Go ahead and do the exchange. So the exchange, what do we have? We have 116.97 Kenya shillings equals $1. How about 6 million US dollar? So please cross multiply and see whether these men never got it correct. These men who had tried it never got it correct. It is supposed to be 701,820,000 Kenya shillings. Please, in this case here, underline that. So now once I've finished these, which is, ladies and gentlemen, the forward contract, now I will embark on straight away the money market, yes, the money market now. So I'll go there and write big title, money market hedging, draw the table to scare the examiner, and then I should be able to get the answers correctly very fast. So I'm giving you exactly 5 minutes for the last time. Do these money markets, and then I tell you what we shall do next. Thank you very much, Fatima, for hitting the ball. The fast kick is normally the best. Even if you'll be wrong, the fast kick is normally the best. 712, 140, 882. $712, 323. I'm so sure it's rounding off error between Fatma and Joseph. One of you must have forgotten to leave out figures with decimal places. One of you. Those answers are very correct, very near. 712, 324. They're getting different answers, although they are kicks, nevertheless. So long as you're kicking it, that's the most important thing. Would you want Mwalimu to do it, or I leave it, you guys to do it as an assignment? Would you want Mwalimu to do it? Now the answers are becoming worlds apart. Do it. Double M, MM. Great. Great. So I'm waiting to hear from the other students. Like now, Jamie, she's now not talking at all. Jamie told me to work on and even prayed for me, right? For this board to be clear. Now the board is clear, Jamie, and I'm not hearing you, Jamie, at all. At all. What's not happening, Jamie? Ama we shall overcome. Mepambana, okay. Great. Wacha niwasaidie. In the interest of time, wacha niwasaidie. In the interest of time, wacha niwasaidie. In the interest of time, wacha niwasaidie. Kitu moja ambayo mimi najua niko very happy with you guys. Nimejua hapa straight away the rule to be applied. Do it, okay. The rule to be applied. So the rule here, remember there are two rules. Kuna ile ya foreign boyfriend na kuna ile ya foreign payment borrow local. So this one nearly a foreign boyfriend because this gentleman is going to receive. So the rule to be used, rule is foreign receipt, borrow foreign. Basically, this is what we are calling foreign boyfriend. Is what we are calling the foreign boyfriend. And remember that the foreign boyfriend always buys dinner. And then the other thing I'm supposed to remember, ladies and gentlemen, very fast is that money markets, we use the spot rate, always a spot rate. So this is the spot rate. And in this spot rate, remember Buga is a Kenyan, so Kenya shilling kopandei. Kenya shilling kopandei. So najua hii ndio buy. Sababu ya left Kenya shilling, the left. So 117 becomes buy, this becomes sell. So this foreign boyfriend is going to buy at 117. I know this 117 is what will be applicable. Kenya shilling per dollar, like that. Great. Thank you very much for throwing in your values. I'm so happy. Even if they are different, at least you have tried. That is the most important thing. So come here, ladies and gentlemen, and draw our table. Draw our table so nicely. Even if I don't understand, I know that the first leg, I'll come and write borrow. Remember, it is foreign receipt, borrow foreign. So this gentleman is going to borrow which currency? Which currency will this gentleman borrow? Which currency will this gentleman borrow? The dollar. Remember, he's a Kenyan. So what is foreign to him is the dollar. So borrow the dollar. And then now he'll come here and deposit or invest the other currency, which is the Kenya shilling. So borrowing the dollar, we know the interest rate here, US dollar, it's 8%. So 8% times what if you are following? 8% times what over what? 8% times what over what? Times 3 over 12, isn't it? Times 3 over 12 plus 1, plus 1, plus 1. Great. Great. And then we have depositing a Kenya shilling. Kenya interest rate is 14%. So 0.14 times 3 over 12 plus or 14% doesn't matter really. So could you kindly give me this figure? Ngapi? Na ikumbuka lazima upeane many decimal places. Hii 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 lazima upeane many decimal places. Aha, wanasema ni 1.02. Thank you so much. How about this one? $1.035. Hapo kushasema hapa convert export. Convert export. Ukasema it's buying when you're converting at 117 Kenya shillings per dollar at Kenya shillings per dollar like that. Now in this case here we come the last thing. Remember this gentleman is supposed to be receiving how many US dollars? Remind me the figure. This gentleman will be receiving how many US dollars? 6 million. So where should I put these US dollars? Where should I put the US dollars? Where should I put them? Kwa dollars, isn't it? Kwa dollars hapa 6 million US dollars. Usikasema ati mwalimu sasa lazima ati ikwe kwa ile legee. Nategemea uweze ka dola kwa Kenya shilling, uweze fanya hivyo. Right? Nategemea mali currency iko. So then up, what do we do? Up, divide, isn't it? Could you kindly give me a figure? Could you kindly give me a figure? Up we are dividing, please give me a figure. Up we are dividing, please give me a figure. 6 million divided by this. Are 58, 588. 588, 23, 53. 588, 23, 53 or 52, one and the same thing. So now from here to here, I can see an exchange rate. Remember, these are still dollars. These are still dollars. So in between there, I can see an exchange. So go ahead and exchange. 117 Kenya shillings equals $1. How about 588, 23, 23, $53? Please give me this answer. Please give me this answer. They're not talking to me. They're not talking to me. They're not talking to me. No, here I'm supposed to cross multiply. Here I'm supposed to cross multiply. So this times that. 688, 250, 235. 688, 235, 235, 294. And I saw like Marietta is like you divided. Marietta, please try to appreciate one thing. There is one thing that I was told by somebody some time back. Some time back, I was told something by somebody here. Right. Like now here, these are dollars and these are Kenya shillings. They're unlike terms. When they're unlike terms, what do? You multiply. Or use this mother tongue. Use this mother tongue. 117 Kenya shilling equals $1. How about this number of dollars? Please don't make that confused. You can imagine what will happen after you've gotten that concept and then you mess up just there. And then you get 0 for the entire question. You will really be badly off, very bad. So in this case here down, what do? We multiply. So then here multiplying is giving us 688, 235, 301 Kenya shillings, like that. Thank you. Is there anybody who got this figure? Is there anybody who got this figure? Oh, Lily has come up with a different figure. Lily has come up with a different figure. Even Naomi again is getting a different figure. So who should I trust? Who should I trust? 688, 235. I'm copying what? No, too bad. I thought they were a bit different. So when you multiply it down, I'm supposed to be getting 712, 323, 537 Kenya shillings. Thank you very much. Let's go to November 2018. Unless there is a question. Unless there is a question. And I don't know why we're getting different values. Like I can see Karen is getting 847 here. It's because you guys never took seriously what I told you. Don't use the figures that are in your calculator because some of them have decimals. Here in money market, you're rich people, you don't make use of decimals. We shall be working with whole numbers. Apart from this, we shall be working with whole numbers. Apart from these three, and also this. The amounts we shall always be working with whole numbers. So November 2018, question number 3, boy. November 2018, question number 3, boy. Are we there? November 2018, question number 3, boy. Are we there? Are we there? November 2018, question number 3, boy. Are we there? Are we there? November 2018, question number 3, boy. Please let us try to grind this more, right? So that this should be the last time we are doing it and we shall never repeat again. So you're told there, thank you very much. Shigiri Investment Limited is a company based in Kenya. The company exported goods on credit to a firm in the USA. The company expects to receive US dollars 800,000 in 1 year's time. It's a receivable, foreign boyfriend. The current spot exchange rate has been given there. However, Shigiri Investment Limited created a probability distribution for the forward spot rate in 1 year's time. So the forward rate in a year's time has been given there. Then we are told there 1 year put options on the US dollar are available with an excess price of Kenya shilling 63 and a premium of Kenya shillings 4 per US dollar. 1 year call options are available on the US dollar with an excess price of Kenya shilling 60 and a premium of Kenya shillings 3 per US dollar. 3, the future spot rate is estimated in a year's time to be Kenya shilling 62 per US dollar. 4, the following are the money market annual rates. So they want us to give them, or rather to determine whether a forward market hedge or rather money market hedge or a currency option hedge would be most appropriate for the company. So they want us to start with the forward market hedge. Forward market hedge. Quite confusing, but I'll be able to get all the marks. I'll get all the marks here, really. I can't miss even one mark there. So long as I'm confident enough, I know how to use my titles very well, block titles very well. I'll come and write for my examiner, forward exchange, or rather forward contracts, hedge. So number 1, I need the amount. Amount is how much in the question? Amount is how much in the question? Amount in the question is how much? $800,000, isn't it? $800,000 receivable. So please give me the roll of the bank. Give me the roll of the bank. If it's a receivable, the bank will, thanks Jamie, the banks will buy. The bank will buy. Then give me 1 year, because this amount will be received in 1 year's time. 1 year forward exchange rate. Give me 1 year forward exchange rate is given in the question. It's given in the question. Never use future. You know, there's a difference between futures and forwards. I'll be telling you what is the difference, because so many students went and picked the futures portrait given note number 3 and they got a 0 all of them. They got a 0 all of them. If you read there, there is paragraph number 3. Paragraph number 3, yes. Paragraph number 3, they told us, however, Chigiri Investment Limited created a probability distribution for the forward. They're calling the word spot, but you see, it's forward spot rate in 1 year's time, the applicable rate, forward rate at that time. So in short, I'm supposed to get an average. I'm supposed to get an average of the 3. Because I'm seeing probability. So I'll come and take here 0.2 times 61 plus 0.5 times 63 plus 0.3 times 67. Could you kindly give me an answer here? 63.8. Are they 63.8 goats? Are they 63.8 goats or cows? It's an exchange rate. So it has to be Kenya shilling per what here per dollar. Per dollar. Kenya shillings per dollar. And that is it. So go ahead and exchange. And here I would want everyone else to remain silent. I would want to get an answer from Jamie. Jamie kasema na kuonea pana. Nataka tupite sisi wote. Nilikuwa naona kuna confusion mahali kwa exchange. Tadi kuonea ni shida, si so long as upite. Ndio kitu ya maana. Jamie, I'm waiting for an answer here. Exchange this amount at this exchange rate you guys that I have there. Give me an answer, Jamie. I'm waiting for the answer. I want you to exchange that amount at this exchange rate. At that exchange rate, give me an answer. You're exchanging the amount. The exchange rate already, they have given it to us. Lily, you're spoiling the game. And I'm going to penalize you, Lily. And the penalty is going to be very severe. I'll ask you to buy everybody here dinner in a hotel where they cannot allow us to eat with our bare hands. We must use cutlery. Right? We shall overcome. Ungesema amen. Thanks. I'm also seeing in this case here, Jamie amepata that answer. It's very easy. So long as you take it the traditional way. Useme 63.8 Kenya shillings equals $1. How about, easily equal $800,000. How about $800,000? Itakuwa easy on a cross multiply. Itaingiwa hii hesabu mmepata hapo, which is 5104. Ni mingi hivyo kweli? 40,000, yes. The only thing you guys never said is that these are Kenya what here? Kenya shillings. Sasa hii swali wanafunzi wengi hata they don't start working on it total. Wakisikia hivyo wanachanganyikiwa kabisa. Lakini sasa mimi nimeshafanya kwanza, which is forward market hedge. So naenda kwa pili naandikia money market hedge, naandika in capital letters, I underline, and then I draw a table. So money market hedge tutawezana nayo kweli. Hii hata hii ni swali rahisi sana. Hizi kunishinda dakika moja. Hizi nipea stress. Hizi nipea stress hii. Na ndio nitaanza nayo kwa exam. Ukitaka kujua unapita AFM rahisi ni kuanza na hii swali kwa exam hii. Wachana wengine mrefu. Kwanza unaanza na hii. You score like 16 out of 20. You will never ever see me in this level again. Perhaps unipate uko juu kwa ISPAC meetings or in other places, but not in a CPA class again. And I also want to draw your attention to this area. When you are revising, you must always peruse through this area. Unachukua unafanya swali moja, usahawi. And then there are some videos I'm sending to you, the financing decisions tomorrow. I would want you to watch all those videos before we meet. Before we meet over the weekend, lazima ukume watch. Msikue kama group ingine wanafunzi wako slow sana kuona video. Hapa na expect mnaona video haraka. Zikiwa ni video kama 6, unaweza kuona 2, right? In a day moja, very early in the morning, another one in the evening, and they're not very long. Great. So, ladies and gentlemen, for the money markets, what do we do? Money markets, in the interest of time, money markets cannot give me any stress, no stress at all. Those are like 6 marks for doing nothing really. Draw the table, yes. Yes, draw our table. Na tulisema namna gani Jamie? Table yetu sisi hapa naweka vitambaa kwa meza. Ndio ni kweli. Sisi siku hizi ni simple people. Hakuna kuweka mambo ya nini? No kitambaa. Thank you very much. Thank you very much. Yes. Just a simple table. Simple namna hiyo. Like that. Aya, kumbukeni ulisema amount ilikuwa ni 800,000 receivable. Na ukaniambia kama ni receivable, hii ni kitu ya foreign boyfriend. Therefore borrow foreign. So this gentleman called Chigiri will borrow dollars. So borrow dollars and then we'll invest Kenya shillings. Invest Kenya shillings. Always here we convert at spot. Convert at spot. Hii hata ina mambo mengi ya kuchagua RG buy sell. Unajua pia unapata wanafunzi wengine ambao understand kitu, yeye akipatiwa swali kama hii, hata kama hakuna kutingiza mkono, unaona kwa exam na ukimkaribia kama invigilator, unaona sasa huyu hapa kuna kutingiza mkono kweli? Hapa kuna kutingiza mkono kweli? Because unatingiza mkono ukiwa unaambiwa 60 maybe to 65, unaona? Umepewa range. Hapa hujapewa range. So which figure should I use here, convert at spot? Which figure should I use here, convert at spot? Which figure should I? It's only Lillian who is seeing that figure. Convert at spot from paragraph number 2. From paragraph number 2. 60, yeah? So it is 60 Kenya shillings per dollar. Thank you so much. Now, could you kindly give me the borrowing rate of the dollar? Borrowing rate of the dollar. Borrowing from note number 4. From note number 4. Borrowing rate of the dollar. Bila kuogopa, usiogope mimi ni baba yako. Baba yako hapana kuogopa babako. Unaweza kuogopa mama yako, lakini hapana kuogopa babako forever. Lakini mama yako ukitaka kumuogopa, muogope. So borrowing US 12%. 12%. So 0.12. Sasa hapa pia matata. Unaanza kupata mwanafunzi akisema times 3/12. Namwangalia 3 umetoa wapi? Sasa hapa mimi nafaa kufanya times what over what? Times 1, isn't it? Ama ukitaka sababu ni ya whole year, useme times 12 over, ukitaka kama times 1 is the better one. Times 1. In short, vile Dex anasema wachana hata kumultiply, wewe sema plus what ya Dex? Plus 1. Plus 1. Plus 1. Which will end up giving me what figure somebody here? 1, because they have told us the amount received is receivable in 1 year's time. It's receivable in 1 year's time. So this one here gives us 1.12. Thank you very much. Now come to investing. So now investing the Kenya shilling. You see, investing is the same as depositing. Investing is the same as depositing. Kenya shilling. Kenya shilling. Kenya shilling. Sasa Fidelis akishajua concept anaruka. Anaruka nenda mbele sana Fidelis. So tunasema 0.09 times 12/12 plus 1, which is 1.09. Which is 1.09. Thank you very much. Now we look at the money in the question. The money in the question is $800,000. Shetani akikuchezea kama yeye, unakuja unaweka dollars hapa kwa Kenya shilling. Uzuri shetani na mshinda kwa kuomba. right? Dollars unaweka hapa kwa dollar hapa, $800,000 hapa, $800,000 pale. So unaanza safari up. What do we do upwards? 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 We divide. Thank you very much. Could you kindly divide and give me an answer? Could you kindly divide and give me an answer? Kindly divide and give me an answer. Yeah, $714,286. $714,286. Whole number. Great. Now from here to here, we have an exchange rate. We have an exchange rate. Of course, mtu amezoea anaweza fanya shortcut. Zikiwa ni different currencies, you multiply. You multiply, so multiply. So you multiply, what figure are we getting somebody? What figure are we getting somebody? 42,857. 42,857. 42,857. 160. 160. And now these are the fake Kenya shillings. Now down, what do we do? Down, what do we do? Down, what do we do? Downwards, what do we do? We multiply. Thanks, Jamie. Multiply. Problem now, Jamie, this is a great concept that I've really understood, taken time to understand. But Jamie, when I'll ask you a question, I'm not talking to Jamie alone, but figuratively now, yeah, Jamie, when I ask you a question on this area 1 week from now, will you be remembering? With the practice, yes. So 46, 714, 304. 714, 304 Kenya shillings. Hooray! That is enough for you for today. The question that I would also want to get each one of us having done when we meet, actually not even when we meet, tomorrow in the evening, I would want somebody, tomorrow I would want somebody to have done this May 2017 question number 4B. May, I hope you have taken that down. May 2017, question number 4, boy. May 2017, question number 4, boy. We'll be introducing ourselves to this thing of interest rate parity, etc., which is the last area here. The last area here, before we look at the puts and whatever options like that. Now, Marietta wants me to explain how we are placing the money. It's very easy. It depends on the rule. Like here we used foreign boyfriend, borrow foreigner, right? So we said borrow foreign, which are what? The dollar. So this becomes a dollar foot. So if it's a dollar's foot, the 800,000 here are in dollars. You can't place them where? In Kenya shillings. So you go as per the currency. So Marietta try to practice your one. $800,000. You can't place them where? In Kenya shillings foot. So long as you shajua mal dollar iko na Kenya shilling. According to the rule that you have. According to the first rule ya kusema kwamba lazima tizi hapana. It depends on what year, on the currency. I hope that is helpful and you shall be able to now practice the questions that you have done. Right. Great.